It started, sir.
Okay. Yes, thank you, Mr. Maharaj. So I
Thank
welcome all the students back to their second year after completing their summer internship project. I hope some of you are still doing their projects in your companies. So this is my first session on trading strategies. Students, I'm unable to hear you anything, and you are not even visible
Yes, sir.
also. Okay, I could see Roshan, Chahal, Kavit. Okay. So I request all the students to switch on their videos for the effective interaction. Otherwise, we'll be losing out. Imagine you are speaking continuously without even knowing whether the participants are understanding or not, looking at their faces, how difficult it is, right? Okay. So how many students have joined here? I'm unable to see. Just a minute. Okay, 25 students are there. Maharaj and I, 23 now. Okay. Yeah, how many of you right now there in the campus? Just raise your hands, just in case if you've reached campus already. Only one. Okay. So raising the hands in Zoom means you have to go and raise your hand. There is a function out there. Okay. Fine, Harsh. It's fine because I've been accustomed to this because almost for 2.5 years, I did this online classes only. Okay, so that's how we know it. Okay, so this is something new for me now because for the last 1 year I did not use it. And suddenly, all of a sudden, this has come up now. Fine. So let us go to the session plan. How many of you gone through the session plan which has been already posted? How many of you opened your Moodle page? None of you
Woman, sir.
Yes, I opened it.
opened it. Okay.
Sir, opened it.
Fine. So let us see quickly what is there in the session plan and then we will move towards our first module. Okay. So we got 40 marks for the continuous assessment and 60 marks for the which has been split into midterm and end term. As usual, what we did for corporate finance too, we'll be doing the same here. Next comes, we'll directly go to the session plan. Okay, so the technical analysis and behavioral finance, you're actually going to be learning two courses in this particular trading strategies. Okay, the first one is a technical analysis and the second one is behavioral finance. Okay, so these are the two subjects we'll be discussing in this particular course. So let us go with technical analysis to start with. So what is this technical analysis and why should I learn this? So technical analysis is a course wherein you'll be learning all the charting techniques. Okay, supposing if I ask you to analyze any random company, State Bank of India. Okay, so can you fix up a stop loss? Can you fix up a target price? Okay, so can you say something about what are your technical views on the State Bank of India? Okay, so that is what you are expected to do. You should have honed that particular skill at the end of this particular trading strategies course. Okay, so if I give you any chart for that matter, any company's chart for that matter, you should be able to analyze it. Okay, so independently, not taking help with anybody else. Okay, so that is what I am actually aspiring you to do it, and that is why this particular course is all about. Okay, so we'll be discussing about very basic things to start with: line chart, bar chart, Japanese candlestick. Will not take not more than half an hour for all this. So different time frames. You know that there are different time frames: 1 minute chart, 5 minutes chart, 15 minutes, 30 minutes, 45 minutes, 1 hour, hourly chart. It is end of the day chart, weekly chart, monthly chart. So these are the various time frames we'll be having it. We'll discuss. Okay, so you'll be discussing what are your trading perspectives the moment you change your time frames. Okay, so I'll be assuming that you know whatever we have discussed in corporate finance 2 part 2. you know that, and from there we are actually going to be moving on, because what you have learned in corporate finance too is very important for understanding the further part of this discussion. Okay, I assume that whatever already been taught in CF2, you know it already and you already brushed up your concepts. That is what I'll be assuming. And with respect to using the technical analysis jargons, I'll not be using it. Once I introduce it to you, I'll be using it. Okay, so that is what I'll be following now. So time frames, we already said, and that support and resistance level, which is very easy one. And we also be discussing with respect to trend line perspective, how the support and resistance level will be working. We also be discussing about Fibonacci series and all that. And here we'll be discussing about in depth, whatever we are charting techniques will be discussing, we'll be discussing through a trading view platform. Okay, trading view, you must be knowing it. I introduced this in CF2 itself. You have done some simulation tradings also. So that is the best charting tool available. Apart from that, we have got other the chart tools also, like charting.com. We have got Go Charting and various other various other platforms are also available. Okay, so as and when it is required, I'll be switching towards all this. The definition and interaction of trends and how to draw trend lines, and including support, resistance, gap theory, importance of volume and in technical analysis. So in other words, what we will be studying is price action analysis will be studying. To start with, what we cover first of all is price action trading. What do you mean by price action trading? Anybody knows? If you, just in case if you know it, you can just tell me what is it. What do you mean by price action trading? Let's see how many know what is technical analysis to some extent.
Sir, may I proceed?
Yeah, go ahead.
Sir, actually the price action generally based on the assumptions that market is efficient. Means almost every news which is going to come or have come, it is effectively managed by the stock prices. And now the price is moving according to higher high and lower low formations in some cases, or sideways market as in the case the news is.
Okay, if you are going to make an assumption that markets are efficient, there is no scope for technical analysis. If you feel that everything is rightly priced in the market, supposing what do you mean by efficient market means whatever the price, supposing take an example of TCS. TCS is right now trading at 3,200. Okay, so what do I mean by efficient market means the 3,200 what is being right now, TCS is actually right now quoted in the market is the best price. In other words, you cannot really make profits by using technical or fundamental analysis. That is the meaning of the efficient market. Okay, so when we take into consideration of efficient markets, okay, so what are we saying is whatever the price right now we have is the most discounted price it is. By just buying it, we will not be able to make any superior profits. That is the meaning of efficient markets. Okay, so you'll be learning in detail about this in your investment analysis and portfolio management. I'm not going to touch upon there. Only glimpses of it I'm going to tell you. Okay, so we are not going to assume that the markets are efficient in case of technical analysis. Because there is an inefficiency in the market, we want to exploit that particular inefficiency and we would like to make profits in the market. Getting it what I'm trying to say you? Okay, so that is what we will be taking into consideration. And what is price action? Price action means we'll not be using any indicator as such. It is going to be clean chart trading. It is. I'll not be only volume data will be there, and the maybe bar chart or maybe candlestick chart will be there. Only using these two, I would like to predict what lies ahead. Okay, then it is actually called as what the price action it is. Okay, so don't worry if you're not understood, because price action will be covering in 5 to 6 sessions. Okay, so that is what is the length of duration will be discussing. Okay, so how many know what is technical analysis and how to do technical analysis in some detail? Just raise your hand so that I'll be having like how many of you in fact know what is technical analysis already. Just raise your hands. So Kavit, okay. Only 2 hands are raising as far as my information. Ashit and Kavit. So others don't know about technical analysis. Anything about technical analysis you are not knowing it. Is it the assumption I'm supposed to be making it? Yes or no?
Yes, sir.
Okay. So technical analysis, fine. So I'll not be making any assumption that you guys know something about technical analysis. That is also I'll make sure. Okay. Just a minute. Oh, this PDF is visible to you?
Yes.
Yes,
Okay.
sir.
Okay.
Yes, sir.
So the most part of our discussion goes in understanding price action trading itself, because price action is quite important, and it is also quite if you know what is price action trading, in other words, it is you can actually start making money in the market, in other words. Okay. So next comes a Dow theory, lagging indicator, leading indicators. Okay, so all that we'll be discussing. So what is a lagging indicator? Okay, so first of all, you should understand what is an indicator. So we'll be using from the price, many derivatives have actually happened, and one such things are actually called as indicators. It is. So we have got moving averages, EMA, MACD, Bollinger Bands, oscillators, RSI. So all that we'll be discussing part of your lagging and leading indicators. Okay, so all the indicators we'll be discussing once we discuss the price action trading. And next comes divergence trading. So there are going to be multiple divergences, including falling divergences, and next comes the positional and day trading using divergences also. So we can even trade uh, the divergences for intraday trading as well as positional. Okay, and next comes the Fibonacci series. It's part of your support and resistance levels. It is. Next comes a trend reversal and continual patterns. So there are various patterns which are actually there, and we'll be discussing what are the various patterns. The moment you're going to notice that particular pattern, you should be able to make some analysis out of those patterns. We'll be discussing that. And next comes risk management, how to actually manage the risk and all that. Okay, so how much should be a stop loss and all that. And next comes paper trading. So there are various tools and techniques that is actually used. Okay, so whatever the tools and techniques you already learned in the class, whether it is really going to be helpful, we'll be doing through paper trading. And some of you mentioned earlier that are we going to also be covering back testing? Okay, so back testing, there are some free tools are available. I checked in the internet domain, it is available. So wherever it is possible, I'll be also be using the back testing softwares also. Okay, if they are free in other way, then I'll be using it. So next comes some of the miscellaneous techniques like Heikinashi, super trend, Arun oscillator, single and multiple candlestick patterns, which is again part of your price action. So parabolic SAR, dip and trip strategy, application of technical analysis for various financial assets such as stocks, currencies, commodities, etc. And next comes the live implication of all these concepts on TradingView platform. So I have seen that in the past, I want to use some cases for this particular course, but Harvard cases, Ivy cases, none of the cases are available, excepting one or two cases, some classic cases, which are very good old cases. We don't have so many cases to deal with in case of technical analysis. So what I'm thinking is I'll be using real market data itself for doing the live analysis. Okay, I'll not be teaching you on a PPT instead of teaching you on PPT. Obviously, the concepts will be taught to you first of all by PPT, and later on we'll be going to the live market. So that is why I asked PGP office to give me this particular trading strategies in the market hours. They are so kind enough in accommodating the trading strategies sessions during the market session. I'm quite thankful to them in other words. Okay, so we'll be using the live market data for analysis purpose, for understanding the markets in other words. Okay, so next comes the behavioral finance of it. So behavioral finance is all about whatever if you're actually trading in the market, what happens is there are going to be various sorts of doubts you'll be having, whether my trade, what I'm going to take, is actually going to be working or not. Okay, so the moment you're getting profit, okay, the moment you're getting profit, only 2% you're exiting. Okay, and there is a loss of 10%, you're not booking your loss. Okay, so that happens when you go for live trading. So how to fix all those issues? Okay, behaviorally, because mind is everything. In case of technical analysis, mind is everything. How are you going to train your mind is also equally important. If you could train your mind in such a way that it will be quite helpful for you for trading as well. Supposing if you're mentally not strong, if you're not a person who is emotionally strong, Okay, that results can be seen in technical during your trading activities as well. If you are mentally strong, then what happens is your profits will go up. Okay. Okay, I'm not undermining anybody or demeaning anybody, but that is how the market works. It is, if you're already a trader in the market, you know it, what is the impact of your emotional vigor is on the your profit scenario. You must have already seen it. Okay, so there is a separate branch of finance which is actually called as behavioral finance, because psychology and finance, we mixed both of it, and that is how the behavioral finances came into existence. Okay, you must have studied a course called as organizational behavior, is it not? So again, it is actually something to do with your psychology and HR. You mixed HR with the psychology, and that's how the whole of the course has been made that way. Okay, if you mix psychology with finance, and the course name is actually called as what? The behavioral finance it is. Okay, so we discuss in depth regarding that as well, and some of you will be quite curious to know, in fact, that course as well. And I have seen many students are they became more curious than actually understanding technical analysis, because they started to understand how their mind really works. They were understanding it, so because of which they are quite curious about knowing that as well, in other words. Okay, so the PDF, just a second. Let us go for the continuous assessment plan. So midterm 30, end term 30, we already discussed. As quizzes, there will be 4 quizzes of 5 marks each. So 5 fours are 20, and there is going to be project for 20 marks. So this time, since you are there in the second year, I might ask you to form your own groups, and there is going to be a project that will be given for 10 marks. So I have not decided it should be 10 marks or not, because in between I can think of bringing 2 projects of 10 marks each also. So let me see how the course unfolds, and it also depends on your interest level in the course as well. So based on that, I'll be doing that. Okay, so at the end of every 5 sessions, the quiz will be conducted. You know it, the way we have done it in case of CF2, we'll be following the same pattern. It will be online, and it will be using Moodle. The quizzes will be conducted, and students should have. And the third point is very important among these instructions. Students should have a lot of patience to sit through the sessions and ponder the concepts in detail. Definitely, these are going to be part of your professional life. What happens is many students have chosen this particular course as an audit course. Okay, as far as my knowledge goes, at least some 15 to 20 students have chosen this course as an audit course now. Okay, so I don't know what is the serious level of these students who have chosen this course as an audit, whether they are really serious or not. Time will tell us. I don't want to be judgmental at this point in time. Okay, so I don't want to be judgmental as well. So let's see if you guys are too curious, and if you're attending all the sessions upright, then I feel that whatever the audit, based on your response, then I'll be restricting next year. Supposing out of 20 students who have enrolled for audit course, only 5 finishes the course at the end. Okay, so then what it is going to be quite difficult for me also, because I have taken all my efforts in making you understand, and you're quitting in between itself because there is no such implications. You can quit or something of that sort. Okay, so maybe for your juniors, I can actually restrict. So I'll not take more than 5 students in audit. So that is actually going to be deterring factor for those juniors. Okay, because of your behavioral issues, or you not taking the course quite seriously, they'll be suffering it, in other words. Okay, so if I get 20 nominations, I can only have 1/4 of it, based on one-to-one interaction or something of that sort. But here, in case of audit course, those who want to take up the audit course, I have actually approved it. Okay, so that is how it is. So let's see how the audit students also perform in this particular course by class interaction or whatsoever it is. Okay, next comes, so you should have lots of patience in listening to me, in fact. Okay, so it's all practical things I'll be telling in the class, and if you don't have patience to sit through, okay, so every now and then you would like to go out in your offline class, or water, I have to fill up the water, I have to go to washroom. So if you are going to do this kinds of things in your second year, it is not going to help for both of us, you as well as me. Okay, so please be sincere in attending that. That is what I can say. Next is don't post any, just in case if I've used any cases. As I told you, I'll not be using any cases. All live things I'll be performing here. Just in case if there are any cases, please don't post them. And technical analysis course by Mayers, Thomas A. This is what is the textbook I have actually given you as a complimentary copy for the last year students. This year also I suggested this book. This is very nice book. So let's see. Still there are some speculation going on. Okay, so I am not. I have given three choices. Okay, if this is not available, the next one, and if the next one is not available, on the third one. So let's see what ultimately you're gonna receive. The library office will decide based on the inputs given by me as well as PGP office. And this is for the documentation purpose for NBA. You can skip this part. Okay, so there is a question coming from Laksh. I took trading strategies. Okay, so anything related to admin thing we'll discuss off the class. Only with respect to academic doubts, we'll restrict in the class. Is it fine?
Okay, sir. Thank you, sir.
Yeah. Fine. So with this introduction, so what I do is I'll go to the first module of your trading strategies. It's taking some time. My PPT is taking some time to open. So let us wait for a while. Is the PPT is visible?
Yes, sir.
Yeah. So we'll start with the first module today. So the early 2000s saw an expansion of investment and trading opportunities to a global scale in terms of both the cash and the futures market. Okay, so in the year 2000, what you are doing? May I know?
We were just born.
Oh, is it? Sorry. Okay, so in 2001, I completed my graduation. My BCom I completed in 2001. I was not having any exposure to the technical analysis as such because technical analysis is a very costly affair. Tell me why it was a costly affair.
Because of the lack of softwares.
Forget about the softwares. We don't have any internet at all at that point in time because it was very costly. Because I have to pay for the internet. I was going to a cyber cafe by paying 65 rupees per hour. Those were our days. Actually, we did not had any mobile phone or geo connectivity as such. What you guys are actually experiencing, Wi-Fi you forget. So all those facilities were not there. And even if supposing I'm telling you an American scenario, if you are there in America, maybe at that point in time, since it is ahead of us some 25, 30 years, that is what people normally say. So people were paying for the tick by tick data. What do you mean by tick by tick data? Anybody would like to know what is it? You have to pay for tick by tick data also. We discussed in corporate finance part 2.
Sir, tick by tick means every point in time when the price is changing.
Yeah.
With every change in
Correct.
price.
So how the in exchange the up and down happens, no? You must have seen in case of charts also. Every microsecond, what is it? In a microsecond, some 2 or 3 times your stock price can actually go up and come down, whatever it is. In other words, in 1 second, your stock price can actually go up and go down, maybe 3-4 times. Okay, so if you're capturing that data also, then it is actually called as what? Tick by tick data it is. Okay, so that data getting on the chart is very difficult in those days. One of the other mentions that we should be paying almost $10,000 per year for getting that particular data in 2005. Okay, so right now, so practicing technical analysis was very difficult in early 90s and early 2000s, what I'm trying to say. But we have reached to such an extent we are there right now in 2023. Okay, so getting real-time data is free, virtually free it is it not? Because your trading views there, if you got signed up for Zerodha or maybe for that matter Grow, they're going to give you feeds of the data for free it is. Okay,
Yes,
so
sir.
you can understand how struggle it was in the year 2000 if somebody wants to say themselves as technical analyst. They should be going to the office, and the office has got a separate software for that, and it should have computer and internet. Then only you can actually practice. I do understand when I was going to internship in the year 2006 and 7. Okay, because I did my MBA after 5 years of gap. So when I started going for internship, I do understand my organizational guide was actually writing some data points on his book. Okay, on his book, and he wanted to do some sort of technical analysis by writing something on the piece of paper. I'm telling you, because of technology, it was quite difficult for all of us to do technical analysis, but gone are those days, in other words. Okay, so in 2010, what has happened? Innovation in the communication industry enabled everyone to plot data on intraday basis for relatively little cost. In 2010, what has happened? What has happened is the internet was slightly freely available. It is not that costly. At the same time, the many companies have actually come up, iCharts.com or maybe stockcharts.com. So these have actually come up, and because of which in 2010, early in 2010, it is slightly easier when compared to in 2000s, I'm saying. Okay, so today the numerous charting sites have sputtered on the internet. So now virtually anyone can actually practice technical analysis. This is what is a luxury we have at this point in time. That is all I have to say through this particular slide. Okay, only thing is you should have a computer and the internet, so everything is free. After that, it is actually going to be your time. You should be having sufficient time for yourself to do these kinds of analysis. So technical analysis, let us see the introduction for those who don't know what is technical analysis. Okay, let us go through in storytelling mode now. Okay, listen to me very carefully. Okay, so imagine you're going for a vacation in a foreign country where everything, including the language, culture, climate, food, is very new to you. Okay, so tell me one country where you're going where you don't know the language of the country, climate is too different, food is also quite new to you. Maybe let us take Hong Kong. People don't know English there. Mandarin you should be speaking. If you start speaking, nobody will understand. They'll not even respond. That is why people are actually using their translators on their mobile phone if they go to such nations. Okay, assuming that you're going to China for your vacation. On day one, you do the regular tourist activities, and by the evening, you're actually very hungry. Okay, so after spending some time on the streets, you're hungry. You want to end your day by having a great dinner. You ask around for a good restaurant, and you are told about a nice food street which is close by. Okay, there is a food street normally which has been there, and if you go, you'll get all varieties of food. That is what you got to hear from somebody, and you headed towards that street. Okay, you decided to give it a try there. Okay, so if you, to your surprise, there are many vendors selling the different varieties of food. Obviously, it is a food street, so many vendors are selling the street food. Looking, everything looks different and interesting for you because you don't know what they're actually doing, selling, because it's the culture is different, food is different, language, of course, you don't know it. So you're absolutely clueless as to what to eat for the dinner, right? Because you're alone, you're not accompanied by anybody. So to add to your dilemma, you cannot ask around, you don't know the local language also, assuming that there is no translator available at that point in time. Okay, so given all this, how will you make a decision on what to eat? Yeah, go ahead and answer to this question.
So by
Your,
appearance of food.
by the appearance of the food, just because the food appearance is good, how can you say that that food vendor is actually quite good or that food is good?
So if we don't have any data, we have to take a chance in this case. Ki the food is
Okay,
looking good,
so
we
that
have
is
to eat it.
Chahal's version of answer. Let us see anybody else interested in answering.
Sir,
Yeah,
we can
go ahead.
search about that food on internet, like what is the food is
Okay.
all about.
Okay, so you can go search about that food in the internet. Okay, fine. Yeah, any other answers?
We can also follow the crowd where
Okay.
it is going. Yes.
So Siddhartha is actually bang on. So he's saying that he will see the crowd. So wherever there is a huge crowd, people normally that should be good food and the vendor should be good. At least I'm saying, if you don't anything, then if you don't have access to internet and all that, if you don't have time, you're quite hungry. Sometimes you're so hungry, you're unable to do all those things. Though you want to do, but you don't have time for all that. Okay, so where there is a huge rush, right? So you go and stand in that particular queue, and you might taste that particular food, what is being served by that vendor. What I'm trying to say is this is exactly is going to happen in case of technical analysis too. Okay, which stocks we are supposed to buy today for trading? Tell me, how do you decide? Supposing that today I want to go for intraday trading, you know what is intraday trading, right? So buying and selling the same day, and you book your loss or profit, whatever is there for the day, and that's how you come out of the trade. Okay, your time horizon is only 5.5 hours because 6.5 hours or 5.5 hours, whatever the market which has been opened for, right? So how are you taking a decision? Okay, so let me go through, let us go through one small exercise here. So there is a chart which is coming up here. So Arindam Banerjee is saying that it is through volume. So number of customers in the stall, that is what Arindam is saying. Yes. So that is the right answer. So that is also Siddhartha also was mentioning. So I'll just go to the website. You must have known money control, right? So money control volume shockers. You go to money control volume shockers. Okay, so volume shockers on NSE, you just click on this. Okay. It is going to give you see 13.98. So what is it? Chambo, the chemicals it is into chemical sector. You can see it is up today 13.98, and the volumes are also is actually going to be significant. It is for this particular company, I'm saying. Okay. So normally what they do is the starting point for technical analysis. What I'm trying to say here is the volumes are significantly high means many people are showing interest into it. Why many people are showing interest? There should be some news, right? That is why people are actually showing some interest. Okay, so how do you know that there are 5,000 plus companies which are listed in the market? Okay, only I have to, and my time is limited. I can't really do researching 5,000 companies in 6.5 hours. It is quite impossible for me also. So what I do, start doing is I'll just go to the websites like this, and I would like to know which particular company's share price gone up significantly today. In other words, which stock has actually gone up significantly, gone down significantly. In other words, I want 5 top gainers of the day and 5 top losers of the day. If I could notice it in the first 30 minutes, okay, and you know, trend is your friend. That is what it is normally told in the stock market language. That is one of the proverb. Why it has been called as trend is your friend? What do you mean by trend is your friend?
Because sir, generally market moves like the trend. Wherever the trend shows the direction.
What do you mean by trend is your friend? First of all, you tell me what is it? Why it is told that trend is your friend?
So we can see through the example of Adani, like when we got the news.
Yeah.
So because of that bad news, everyone goes against to the trend. So everyone removing their stocks from that. So that is the example of trend is your friend. Like everyone follows the trend.
Yeah, that's correct. So Adani, maybe the day one when before Hindenburg report has come up, some news must have leaked. Okay, so the stock may be down by 6 or 7% on that day. Nobody were knowing about Hindenburg. Okay, only Hindenburg must have taken some short positions. So that day nobody were knowing it. Supposing that if you're shorted on that day itself, thinking that trend is your friend, okay, so significant profits you would have actually made, right? You know what has happened later on from 3,400 or whatever the price it is, it has come down to as low as 1,000 rupees also at one point in time. Supposing if you have taken a short positions in the derivatives market, is it not? So trend is your friend is something which is very, very much proven in the stock market, and that is very much true in case of technical analysis also. So you can see this what is it Chambond chemicals, it is up by 13.98%. Supposing if I would have seen this, okay, when it is only up let's say 3 or 4%, what if I have gone long on this particular company? What if I'm saying? Obviously would have actually made another 10%, or maybe another 8% would have actually made it at that point in time if you have bought it, is it not? So similarly, you can go to other stocks, a negative side of the story also. Anantraj, it is down by minus 2.25%, you can see. Just a minute, I'm just getting a call. Sorry. So Arindam saying that we shouldn't go against the trend. That is what he's saying. If it is up, take the bullish position, and if it is going low, go for the bearish position. Yes. So we don't know whether this particular minus 1.63%, what is it, Madhucon projects, whether it is actually going to go down or not. Obviously, it is going to give you a hint that there is something which is happening in this particular company. What I do is I'll just go to Madhucon projects, the chart. Okay, I try to analyze the chart at that point in time. So instead of taking any random chart and analyzing, okay, so I got a hint that there is something is happening with respect to AstraZeneca, and there is something which is happening to Delphi World. I'll go to that particular stock, and I would like to make whatever the knowledge I have with respect to my technical analysis. I want to start analyzing that particular stock based on whatever the knowledge I have regarding technical analysis. If I have that, I'm telling you. Okay, so that should be a starting point. Okay, so volumes will tell you, okay, there is something is wrong with the share, or something is very good with the share. Either ways, it is true. It is simply people will not show their volume spurt will not come all of a sudden. It is there should be some news, some insiders must be buying, some block deals or bulk deals must be happening. Bulk deals means, you know it, right? Many people like institutional investors and domestic investors, if they're buying in a large number of quantity, if it is more than 1%, what happens, that is automatically comes up in the block deal category, and you can actually see who has actually bought the shares next day. That is what you have seen in the newspaper, right? In the newspaper while reading, you have seen bulk deals as a column there, is it not? So that is one part of it. So that should be a starting point of technical analysis. I hope you have understood. So you are doing technical analysis. Fundamental analysis means what? If I know the ingredients, I'll just go check the ingredients. The food is made up of what ingredients? Is it not? If possible, I'll just taste it. If the tasting is possible, then it is actually part of your fundamental analysis. Getting it what I'm saying? So what is fundamental analysis then? We are going to go to the next slide now. Just a minute. So tell me, what is then fundamental analysis is all about? Now we have understood technical analysis. In case of technical analysis, what we do is, yes, I would like to invite answers from you as well before I go on. Tell me, what do you understand by technical analysis? I have explained a few aspects of it, not completely. Tell me, what do you understand by technical analysis now? Quick.
Sir, can you repeat the question, please?
what do you understand by technical analysis? The question we have discussed to some extent.
Sir, when we make financial,
Kavit, go ahead.
yeah. Sir, when we make our financial decision regarding chart patterns and indicator what it is showing, regarding support and resistance and volume it is having and what is the trend.
No,
then
no,
it
no. You are
will,
going very in depth of technical analysis. So
okay.
people are there, students are out here. They don't know what is technical analysis. For them, how you will explain what is technical analysis?
Sir, actually, to see the past trend or to see the for the future trend, to predict the future, what is going to happen.
Okay, so technical is technical analysis. We want to predict the future, so that if we know what lies ahead in the future, I can take some positions today. If I expect that TCS is going to crash tomorrow, if I know today itself, I can actually short the share today itself, right? So that knowledge you are going to gain by analyzing the charts. By analyzing the chart, what do we mean by that is through technical analysis. Yeah. Anything else? What is technical analysis? Quick.
So at a single glance, what the numbers speak actually.
What the numbers speak. Okay, can I say that balance sheet analysis is also number? So balance sheet analysis is also called as technical analysis.
No, sir, that will be the
Tell me the
fundamental.
inputs. Tell me the inputs for technical. For doing technical analysis, what inputs you require?
It's all about understanding the trends and
No, before that, what are the inputs for doing technical analysis? Trend comes later. I'm not saying your answer is wrong.
So the volume that you showed just now.
Volume data.
price.
What do you mean by volume then? Because there are many students who don't know what is volume.
Sir, basically, how many people are trading in that stock at that particular point in time?
Yeah. So you know that when you buy a share, there should be a buyer and a seller. Okay, if I say that volume is 500, what do you mean by that? Is 500 shares are bought and sold. I am going to take one leg. I am not adding 500 plus 500 and making it 1000 here, because 500 shares bought and sold means for 500 buyer would have got the share and seller would have sold the share. What I'm trying to say here is it is actually in total, it is actually how much? It is only 500 only. It is not 500 plus 500 is 1000 it is. So volume we are going to take into consideration of only one leg. How many shares have transacted for that particular price point is actually called as what? Volumeters. Is it clear what is volumeters?
So once again, sir.
You want me to repeat?
Yes, sir,
Anirban?
yes, sir. Yes, sir.
Okay, so volume means how many shares have got transacted at that price. Supposing 100 rupees is the price. Okay, for 100 rupees, how many shares have been got transacted by how many bought and sold? If for 100 rupees, there are 500 shares have been gotten bought and sold, then the total volume is 500. Is it clear?
Yes, sir.
Okay, so that is actually called as what? 500. What do you mean by 1 billion? 1 billion volume. What is it? What do you understand by 1 billion is the volume?
So it signifies that 1 billion shares are being sold or being bought.
Or bought. Okay, so that is actually called as what? That is actually going to be volumeters.
So what is the time frame that we consider for this? Means
we'll come to the time frame and
okay,
everything
okay.
later on. We are trying to understand the very basics of it, because there are many students, they don't know what is a technical analysis, volume they don't know, what is price they don't know. Okay, so volume, it is very clear, right? So at what price how many shares have been got transacted is actually called as what? The volume. We call it as volumeters. Okay, so once we understand volume, so what is the significance of volume? The higher the volume is good, or lower the volume it is good?
Higher the volume, sir.
Higher.
Okay, so if you are if you are actually wanting to buy or sell something, we look at the volume. Okay, so what is the real demand for the shares you are actually going to look at, and based on that you are actually going to take some decision whether to buy or sell the stock. Okay, in detail of volume analysis, it will come later in the price action analysis, but you have to understand what is the meaning of volume. If you have understood, let us move on to the next thing. So volume is the first important aspect that has been required. That is the raw material for your technical analysis that we have understood. And the second thing, what is important for doing technical analysis? Can you do technical analysis without this important ingredient? So volume is obviously it is required. What is the first important thing before volume?
So changing the price of the particular
price. Price is important. Without price, there is no chart at all, is it not? You require a price. So what I'm trying to say here is your price and the volume. These are the two important aspects that those are actually required for doing technical analysis. Okay, understood now? If you have got price data and the volume data, you are going to mix and match with various indicators or various other tools and techniques, and you want to predict what lies ahead. That is actually called as what? Technical analysis. So what is the raw material? What are the basic inputs for the technical analysis? If I ask you, there are two inputs required. The first one is price required. Price data is required and the volume data is required. If you have got two information with you, you can very well do the technical analysis. Okay, so now we have understood what is technical analysis. Is it clear? Any doubts are there? What is technical analysis?
No, sir.
Okay, so now we are moving on to the next step, which is actually called as fundamental analysis, because since we are discussing technical analysis, you should also know what is fundamental analysis. Okay, so tell me, what do you mean by fundamental analysis? Can you tell me what are the various inputs?
So it's basically checking the health of the company. By that we mean we should look through the balance sheets, all the profit and loss statement, cash flows, what's the company doing, its competitors, its market share, all these elements.
So we can also look into the several ratios of the company and then compare it with the industry standards as well.
So what are going to be the inputs then? What are the inputs for the fundamental analysis? Can you tell me you have said me what are the inputs of fundamental technical analysis? Similarly, can you tell me what are the inputs of the technical analysis? Sorry, technical analysis you have said. For doing a fundamental analysis, what are the inputs?
The financial health, all the parameters.
Inputs would be ROE, ROCE.
Those are
ROI.
not the inputs.
Reports.
Pardon?
Reports.
What reports?
The annual reports.
Financial reports, sir.
What are part of your annual reports? I am not clear. Tell me as if
the
you are
balance
telling
sheet.
to a layman. Yes. So
Balance
your
sheet.
income statement, your balance sheet, your cash flow statement, funds flow statements, these are actually going to be your raw material. And through which you are going to build up various ratios, which are again going to be outcome. Is it not? Outcome of these balance sheet and profit and loss account, everything. Is it not? Is it clear what are the inputs for the fundamental analysis? Fundamental analysis, we are actually going to take into consideration of the information what is there in the annual reports of the company. Okay, the annual reports of the company means we have got balance sheet, income statement, cash flow, fund flow statement, all that we take into consideration and we do fundamental analysis.
Sir, a question for fundamental analysis. Are we considering company only or like industry, how is industry performing or how is the economy performing in that particular nation?
That is part of your EIC analysis. I am saying that only one part of it. EIC stands for economic, company and industry analysis. EIC, economy, industry, company analysis is actually called as what? EIC analysis. Whenever I say fundamental analysis, what do I mean is I am referring to EIC analysis. What is EIC analysis stands for is E stands for economy. Why should I do economic analysis? Is because whether I should invest in Indian markets or not, whether the economy is really strong, Indian economy is strong or not, I should be, first of all, be very much thoughtful about it. Supposing that I feel that Indian economy is not good, in the sense that supposing that there is a political turmoil, there is a hung government in the center. Touch wood, we don't have that. Okay, so there is a hung government in the center. Okay, and inflation is very high. Okay, and Indian economy is it is a debt ridden like American economy, assuming so. So are you interested as a foreign portfolio investor? Do you come and invest in Indian markets? You'll be doubtful, is it not? Because you see that you have fixed some parameters with respect to economy, and because of which you are unable to come and invest in India itself, because of which you are thinking that maybe China may be a good market because there is a stability there, political stability is there, inflation is very well under control, and debt is also not that much. GDP to debt ratio is not that much. So you take into consideration of all these factors before freezing up on the nation. If you are doing this analysis, it is actually called as economic analysis. It is. Now feel that for a while, assume that for a while you are actually quite okay with Indian growth story. Now you have decided and you have frozen that you want to invest in Indian markets. That you have frozen. Next comes which industry I should be investing. Are you interested to invest in technological companies, pharmaceutical company, banking companies? Are you interested to invest in BFSI sector? Are you interested in investing in oil sector? or power sector? Which sector are you interested in? So you will be analyzing which industry is lucrative for the next 10 years, because your investment horizon is, let's supposing that it is 10 years. So what I do now, next analysis is going to be industry analysis. I'll be doing. What this particular industry analysis tells me is which industry is actually going to be lucrative. Can you tell me some of the industries which are going to be quite profitable in the next 10-15 years?
The lithium.
What is that sector is called as?
That is
The energy
power.
sector.
Yes, sir. Energy sector, sir.
Okay, energy sector.
Insurance sector companies.
BFSI, you are saying BFSI.
Sir, you are on mute.
Yeah, I'm there sitting in the office, so people are coming and going. So whenever a noise comes, I have to mute. Yeah, so tell me, BFSI is one sector. Next. Do you feel there is a scope for electric vehicles?
Definitely, sir.
Yeah. So which means which all the companies which are producing already the electric vehicles, you know it, is it not? So maybe
Yes,
automobile
sir.
sector may be one of those sectors you may be eyeing upon, is it not? So which means you are actually going to be jotting down some 2 to 3 sectors which are actually going to be lucrative in the coming years. So based on which you would like to buy some companies. Now you have frozen that what is that sector? Automobile sector is good and BFSI sector is good. Okay, so these are the 2 sector. Let us think for a while. And that lithium, what you said is which sector is that?
The energy sector.
Energy sector. So these are the 3 sector you have actually shortlisted. So now can you tell me, among these sectors, now we have to narrow down further. Okay, which companies are actually going to be good? So we have started with the economy. Next, we have actually narrowed down to industry, and now we are actually narrowing down to companies now. Which companies are good in case of automobile sector? Can you tell me which all those companies in India?
Sir, in India, Tata Motors.
Sir, Tata Motors.
So Maruti Suzuki.
Maruti Suzuki.
Maruti Suzuki. So if you see, Maruti Suzuki is not
Mahindra.
coming out with any sort of electric
Yes.
vehicle. Have you seen Maruti Suzuki coming out with electric vehicles?
So not yet.
Sir,
Okay.
Hyundai also, sir.
Sir, Mahindra.
Sir Mahindra.
Okay, so when you want to invest in, you should also see that they should have listed in Indian markets. Hyundai is not listed in Indian markets, right? Can you buy the shares of Hyundai if you wish? Is it not? So what you have to do now is which companies are actually good. So Tata Motors, I take your answer. So how you are narrowed down to Tata Motors? Because you did EIC analysis. Now you have understood that Tata Motors P ratio is slightly good and ROC is also very good. Maybe net profits are also good. The sales are also growing like anything. And even the profits are also growing year after year. So all that you take into consideration once you actually shortlisted Tata Motors. If you're doing a fundamental analysis of Tata Motors, then what you require is balance sheet, income statement, and all the other aspects what we have discussed is really required. If you're doing these kinds of analysis, then it is actually called as what? Fundamental analysis. Is it clear now what is fundamental analysis is all about now? So fundamental analysis is EIC analysis. It is technical analysis means the important what we require in case of technical analysis, we require only the price and the volume data and nothing else we require. We will again, we'll make all the other indicators, everything can be homemade. It can be created through using the price and volume data itself. Okay, so that is what it is all about, fundamental analysis. Okay, so fundamental analysis, hope everybody understood. Now let me go to the next one. So we'll skip some of the aspects for what we already discussed. So technical analysis is a research technique to identify trading opportunities in the market based on the actions of the market participants. So market participants' actions can be seen in the volume and the way the price is rising or coming down, is it not? The actions of the market participants can be visualized by means of stocks chart. Over time, the patterns are formed within these charts, and each pattern conveys a certain message. Some pattern has been taken into consideration, and if you could trace some pattern in technical analysis, we'll discuss what are those patterns in detail. Okay, you are actually trying to understand what is that chart pattern is all about. And if the pattern is repeating, then you feel that whatever has happened in the past, it is going to repeat further. Okay. So the job of the technical analyst is to identify these patterns and develop a point of view. Okay. So that is all about this. And next is like any research technique, technical analysis stands on a bunch of assumptions. Okay. So it also comes with assumptions. Okay. Let us go through the assumptions one by one. Okay. So as a practitioner of technical analysis, we need to trade the markets keeping these assumptions in perspective. We have to take into consideration of these assumptions before actually we are going to be taking anything. So what are those assumptions? We will come in a later part. So before that, which one is superior? Whether the fundamental analysis is superior or the technical analysis is superior? Because normally these are the questions students will be having in their mind. Sir, now I'm going to become a technical analyst. Okay, whether a technical analysis is good or fundamental analysis is good. Which one is really good?
It depends on time period, sir. If we are going for short term, then technical analysis is good. If we are going for long term, then fundamental.
Okay, so based on the time frame, somebody saying which is good and which is bad. Any other answers, just in case if you want to say, because now we have understood peripheral. Okay, what is technical and what is fundamental analysis? Just in case if you want to respond at this point in time, which one is better as per you? You may be wrong or good, whatever. You can just.
Sir, I think both are important. Both are essential in while making the decision.
Okay.
Sir, I think.
Okay, go ahead.
So I think fundamental analysis is more important because sometimes some stocks are pumped up by big investors. So in that case, fundamental analysis can help us to mark a safe from all those stocks.
Okay, so I'm inviting a trouble asking this question, which is better. Okay, so fundamental analysis we are not anyways going to discuss in this course. Only technical analysis we'll be discussing, obviously. Okay, but still I thought of asking you this question. Okay, let us be fair and frank in our opinions. Okay, that is why I thought of putting this question upfront. Okay, let us see. So often people get into argument about particular technique is a better approach to the market. However, in reality, there is no such thing as the best research approach. Okay, nothing called as best here. Okay, so everything will go hand in hand, in other words. So every method has its own merits and demerits. As you know, technical analysis has got its own merits and demerits, and fundamental analysis also has got its own merits and demerits. Supposing I'll take into consideration of fundamental analysis. Okay, so there is one stock you have done all the research about the company. Okay, and that is an extremely good company. Fundamentally, it is a very strong company. Okay, so even it is an undervalued as per your calculation. Undervalued means what? You have to go and buy the stock. That is what is the meaning of it, right? Undervalued means what? It is actually lucrative right now to buy. By only looking at fundamental analysis, you go do the analysis, and if you buy it and you have not taken care of technical analysis for a while, and what has happened is that stock is right now trading lesser than the 200-day moving average.
Sir, pardon, sir.
Okay, so Sanskar is saying that some companies. Okay, so what I said is, an excellent company is there. Okay, fundamentally it is a very strong company and it is undervalued at this point in time. But now you have not taken into consideration of technical analysis for a while because you don't know how to do technical analysis. Okay, assuming that company's stock price is trading lesser than 200-day moving average. I have not introduced what is moving average. I have not told you what is 200-day simple moving average or exponential moving average. We have not discussed, but still I am throwing this particular question to you because some of the things which is not been addressed by fundamental analysis are addressed by technical analysis. Your stock may be undervalued, but there may be chances that that stock is actually going to be go down further extent that is not been told by fundamental analysis. Okay, so you know that some of the techniques of technical analysis can also be used for long-term investing. Not every other technique. Actually, technical analysis is designed in such a way that it is actually going to be serving the short-term purpose. Short-term means it is maybe ranging from less than a day to maybe 3 months, 4 months, 6 months maximum, or lesser than 1 year. Technical analysis can be helpful. But the moment you want to hold your stock for the next 15 years, 20 years, so technical analysis importance will be less and less. It is actually going to be quite less. In other words, what I could summarize here is technical analysis is helpful for the short-term duration that is lesser than a year, starting from lesser than a day. It can even go up to lesser than a year. And fundamental analysis can be done for the long term. If your investment view is, let's say, 3 years, 5 years, 10 years, 15, 20 years, or so on, then fundamental analysis is actually going to be helpful to you. So it has got its own purpose. If your time horizon is short, go for technical analysis. If your time horizon is long enough, okay, you can think of going for the fundamental analysis. Okay, so hope I have said something about it. Let's see what is there on the slide. It is also equally important. Every method has got its own merits and demerits. Okay, so fundamental will never tell us that what is the right entry point. Okay, but technical analysis can actually tell you what could be the right entry point. Okay, and next is, it would be a futile to spend time comparing technical analysis and fundamental analysis in order to figure out which is the better approach. Okay, so both the techniques are different and not comparable at all. In fact, a prudent trader would spend time educating himself on both the techniques so that he can identify great trading or investment opportunities when you do clubbing of the both. Okay, so let us set some expectation with respect to technical analysis. So often, yeah.
Sir, I have a question in mind, sir. So suppose we have done the TA part, and sir, the TA is saying that that we can go ahead. It is sending us a positive signal. But when we are doing, suppose, the FA part, and it's saying that no, don't invest. So then what to do in that aspect?
Yeah, Anirban, as I told you, technical analysis is normally done for lesser than a day as well. Okay, so now what you do is you do technical analysis for a crap stock. Okay, so what the technical analysis tells you is trend is your friend. If you feel that it is trending, it has got momentum, please go buy or short that long or short that particular company, because you don't have any long-term view about the company. Okay, why you want to check the fundamentals of the company in the first place? When your time horizon is only 2 hours, next 2 hours you're interested in the stock. So why you are so much worried about the fundamentals of the company?
Got it, sir.
Okay, so that is the answer I would like to give it to you. So shall we go to the next one? That is setting the expectations. Okay, so often market participants approach technical analysis as a quick and easy way to make a windfall gain in the markets. Okay, so quick and easy way to make money in the market. That is what technical analysis, people who practice technical analysis, that is what is a mindset they have got. Okay, on the contrary, technical analysis is anything but quick and easy. Okay, so yes, if done rightly, a windfall gain is possible, but in order to get that stage, one has to put in required efforts in learning the techniques. You don't know anything about the techniques, but still you're jumping in and you want to trade something based on your gut feeling, and still you want to benefit out of it. Whether it is possible, even if it is possible just by luck. Is it not? You just randomly buy a stock or sell a stock, it goes down or it goes up, and you make some profit. Okay, we have seen in corporate finance too as well. We have bought some stocks. The moment we bought, it went down. The moment I short, it is going up. Is it not? Market is always behaving the way we want to behave. The stock will not be behaving. It is normally behaves opposite of what we are actually thinking, in other words. Okay, so what I'm trying to say is it should be technical analysis supposed to be done rightly, and for that you should acquire all the knowledge of technical analysis, and you have to practice it, and with practice you will become perfect. It is not that the moment you take up this technical analysis course for the next 30 sessions or whatever, the 30 hours, okay, you will become master in this, and once you start trading, you will immediately get making profits. It may not be the case. It is not the case. It is. Okay, so I'm actually going to be teaching you what all the techniques that can be employed, but you should actually do with yourself in your trading account. You have to do that, and there may be losses to come up to start with. So I'll cover all that as well. I think in a single day it is quite difficult to cover all of that. So I'll come to that step by step actually. So if you approach TA as a quick and easy way to make money in the markets, a trading catastrophe is bound to happen. Okay, so you are not really going to be learning that way. Okay, so if you approach tea as a quick and easy way to make money, okay, but you're not thinking it as a business. Okay, today randomly you come to the market and you want to buy and sell something and you want some profits by any chance. If you have this particular mindset, this is not, technical analysis is not for you. It is because there are going to be good days and there are going to be bad days. In business, when you open a shop, okay, what happens is business is, some days business are good, business is good. In some days, what happens is business will not happen at all, but you have to still wait in your shop for the customers, is it not? But in case of markets also, it is going to happen that way. Some days you're going to have profit, some days you're going to have losses. So net to net, you have to see whether you're there on the profit side or you're there on the negative side. Okay, so you have to approach this as a business, then only it is actually going to be profitable. But if you want to make a quick windfall gain and you'll be exit the market because I'm done, I got some 10 crore rupees today, I'll be not be entering the market. If you have got this particular mindset, okay, this is not going to be working out. This is based on my experience again, what I'm telling you. Okay, so you have to approach this as a business. Okay, so can you see this image and tell me what is your quick opinion or reaction on this? Is it visible?
Yes, sir.
Can you comment something on this quick? No comments.
Now we can see on social media there are a lot of traders who have lucrative lifestyles, but I am sure they faced a lot losses in past.
Okay, to make consistent profits, many must have actually suffered a lot in the suffered losses a lot. Is it not? So no technique is actually going to be a foolproof technique in case of technical analysis. Mark my words, what I'm saying. Okay, any one technique, if it is going to give you returns at this point in time, okay, and it is not going to be a holy grail for rest of your life. Why I'm saying like this is markets are going to have an uptrend. Okay, what is going to be working in the uptrend, what techniques are working in the uptrend may not be working in the downtrend. If something is working in the downtrend, it may not be working in the sideways market. What is sideways market? There is no much variations in the market. My market in the some choppy, it is there in some consolidation mode. It is. What do you mean by consolidation mode? Markets are going up and down in some particular band. It is actually called as what? Consolidation. It is. Uptrend means you buy whatever it is. It keeps on going up and going up and going up. People who are going to short in that market will be losing much. Okay, and if it's a downtrend, okay, if you are going against the market, then you'll be the loser. It is. If it's a downtrend, you should normally you should actually go and short your stocks, not that you'll be buying it. If you are a trader, I'm saying. If you're an investor, definitely you got the various other mindsets as such. Because we are here considering only technical analysis, which means we're considering only short-term horizon here, right? Karambar is saying that after COVID market. So after COVID market was actually an uptrend. Everybody feeling that market will fall, fall and fall and fall. What has happened? It was raising every other day passing by. Market was going up only. It is an uptrend. What works in the uptrend? It is difficult to say that particular technique works in the downtrend. So we have got 3 seasons in the market. One is uptrend market, downtrend market, and the sideways market. Sideways market means I told you the market is in the some band, range bound market it is. Okay, so what works in each of the markets is going to be quite difficult to in fact to analyze. Okay, each thing is actually going to be different. Okay, anybody would like to comment on this image? What has been put up? You can think of what comes to your mind.
So we can say that for a newbie, he only sees the profit that a customer is having, but he can't imagine the struggles which a person has to go through earning that profit.
Yeah, struggle is not really seen. You are seeing that this fellow is there in Goa, someday is there in some beach and is actually enjoying by looking at his social media posts. Okay, to come to such an extent, he must have strived hard for 5 years. Is it not? So, but trading is such an activity. If you are actually quite comfortable with this, okay, you don't require any day job at all. I'm telling you, if you become a professional trader, not to start with, you should not quit your job and do this. I'm not telling you all this. Okay, if you're comfortable so much in trading, what happens is you can be your own boss. At the same time, you can actually do this job at being in at any point in time. Only thing is you should have a stable internet connection and you should have a good device. Okay, and you can actually start making money virtually wherever you are. It does not really matter. Okay, so to come to such an extent, it is actually going to be a very hard work. It is. That is what you should be doing it. That is why it has been told that trading is the hardest way to make an easy money. Okay, if I ask you, do you know how to trade in the market? You say, yes, I know how to trade in the market. But if I ask you, start asking you how much times it is profitable, sir, please don't ask me that. Okay, so that is a reality. That is the reality of the what is it, the trading, in other words. Okay, so let us go to the next one.
So,
Yeah, go ahead, please.
sir, can you please explain sideways market again?
Yeah, anybody would like to explain what is sideways market to Aritri?
Sir, when there is no decisive movement, like there is no uptrend or downtrend, it is moving within a range.
Correct. So if it
Yeah,
is
it is
moving,
basically
it is
basically market is hesitating going upwards or downwards. Is going sideways only.
Yes, a kind of a constant market.
constant market. If you buy it, it will not go up. If you sell also, it does not go down much. I'm saying I am using the word much. Okay, it is in the range only. Nifty today goes up by 50 points and goes down by 25 points. Goes up by 10 points and again goes down by 5 points. Overall, if you see Nifty's trading range is only 50 points today. Okay, can you make any money in this market if you're expecting some trend to break out?
You can make loss in case of options.
Yes. So
What
what
you
I'm
said.
trying to say is still you can make money in those 50 points range bound also, I'm saying. But you cannot really expect to make a very good profit the way you are doing your profits in the trending market. That is uptrend or maybe downtrend. Okay. So let us see. That is actually called as, oh, Paritri, you're okay with the answer? Have you understood?
Yes, sir.
Okay. So next we are going to when a trading debacle happens, more often than not not the blame is on the technical analysis and not on a trader's inability to efficiently apply the technical analysis to the market. Supposing if somebody lost their money, they say that the markets cheated. Markets are cheating me. That is what you are going to say. But you never say that I have to learn markets. I have actually analyzed the market wrongly. I have not used the technical analysis properly, and that's why I'm actually having some losses. You're not going to say that. You're not going to accept your mistake, and you have to blame technical analysis for that. Please don't do that. Okay, so if you don't know the technique, please learn it. You become quite technical analysis savvy. Okay, then only you can actually take up the trades, and those can be profitable in the days to come. So hence, before we start delving deeper into technical analysis, it is important to set expectations on what can and cannot be achieved by the technical analysis. Okay, so return per trade. Okay, so return per trade, technical analysis based trades are usually short term in nature. We know that, we have discussed. Do not expect a huge returns within a short duration of time. I will become a millionaire in a single day is not the right expectation from the technical analysis by trading. What I'm trying to say is to start with, okay, because your position size is supposed to be very small in size as such to start with. Okay, so holding period, the trades based on technical analysis can last anywhere from few minutes to few weeks, and usually not beyond that. If you see, there is something called as intraday trading that you do on a day-to-day basis, and next comes what, the swing trading. Swing trading means you'll be keeping your position for few weeks. Okay, and next comes a positional trade, wherein your positional trades can actually last up to 3 months, 4 months, maximum of 6 months it is. Okay, so if you are using technical analysis, you can use technical analysis for all these aspects of it as well. Okay, so it depends on the holding period. Okay, and next is trades. So TA based trades is best to be used to identify the short-term trades, difficult to identify the long-term investment opportunities through TA. Okay, that is also quite important. We already discussed this. So long-term investment opportunities are best identifying using fundamental analysis. Okay, I am not saying that technical analysis cannot be used for the long term. When I'll be using, when we'll be discussing some part of moving averages and support and resistance levels. Okay, so at that point in time, we'll discuss how moving averages and support and resistance levels can be applied to your long-term investing. We'll discuss at that point in time. Okay, not every indicator can be used for long term for sure. Okay, so also if you are a fundamental analyst, use technical analysis to find out the entry and exit points. Okay, we'll discuss based on moving averages and the levels, that is your resistance and support levels. Okay, next comes the risk. So risk, in case of an adverse movement in the stocks, the trade starts making a loss, right? So that is the risk. What is that you have? So usually in such situations, traders hold on to their loss-making trades. Okay, so what you should do is, there is something called as in technical analysis stop loss. So if you're not using stop loss for your trading, or if you are not interested in putting stop loss for your trades, which means you are not a real trader. You're a gambler, in other words. You're not a speculator, you're a gambler. Okay, gambler is a person who can take risk to the any much extent possible. He can take the risk, but speculator is not like that. Speculator knows when to exit the trade. He knows what is the value at risk. The speculator knows value at risk. If something goes wrong, at what extent I should be bearing this loss, I should exit at what price points, he should be knowing it. So if you want to trade in the market without stop loss, if you're trading so far and if you're making some profits in the market, okay, so sooner or later you ending up making losses, because you don't know the very basic principles of technical analysis, that the losses will be part of your trading activity. Okay, so that you have actually forgotten. That is the meaning of it. Okay, so remember, TA based trades are short term. In case the trades go soar, do remember to cut short the losses and move on to identify another opportunity. That is what we should be doing it. We should not take our trades into ego. Okay, so there is you have done technical analysis. Your analysis says that you are supposed to be making profit, but by chance, what has happened? It is not actually, the trades are not actually going the way you want it to go, and which means you are actually making some losses. Don't take it to your ego. Hurry, I have taken this trade, and how can this can actually go soar? How can actually it can go wrong? So don't have that ego. What you should do is you should actually go and cut short your position and move on to the next opportunity. Okay, so we should not, as a trader, you should not have ego. In other words, ego means something to do with your mental ability, right? So you have to know how to actually mold your psychology for trading as well. So that is what we'll be learning in behavioral finance, in other words. Okay. Next is application on asset types. Okay, so we'll see in what assets this particular technical analysis can be applied. So I'll just take a minute break and I'll come back and we'll discuss. Is it fine?
Yes, sir.
Yes, sir.
Yeah.
ये ऑडिट कोर्स वालों को मेल नहीं आता क्या?
ये राज सबको नहीं बताया।
ऑडिट का मेल नहीं आया भाई संस्कार।
हाँ यार, निकाल दिया पीजीपी ने।
डीआरएम का था ऑडिट, तो डीआरएम का कुछ मेल नहीं आया अभी तक।
अरे मेरा ट्रेडिंग स्ट्रेटेजिस्ट का था, नहीं मेल आया, तो भी हमने करमवीर से लिया।
अरे ऑडिट वाले को नहीं मिल रहा है मेल, ठीक है।
ये सब रिपोर्ट हो रहा है।
Hope I'm audible, visible.
Yes, sir.
Yes.
Yeah.
Yes, sir.
So let us go to the application of asset types. What kinds of assets technical analysis can be done? Okay. So one of the greatest versatile feature of technical analysis is we can apply on any asset class as long as the asset type has historical time series data. Can you tell me which all assets has got historical time series data? What I'm trying to ask is you should have a price and you should also have a volume. For all that data series, we can actually do technical analysis. So can you tell me examples of such? In other words, my question is for what all the asset classes we can do technical analysis?
Sir, commodity, forex, NCDX, all this market we can apply technical analysis.
Yeah.
Even the crypto market.
Crypto markets. So it is something like if you've got a time series data, the price data, if you have, so definitely we can actually do the technical analysis. Okay, as rightly mentioned by Arindam. So we can do it for cryptos, we can do for forex. Forex means your currency exchanges, euro versus USD, USD versus INR, etc. And you can do for commodities, gold, silver, copper, platinum. For all these commodities, we can actually do technical analysis. And obviously, we can do it for index as well. We can even do this for futures market as well. And we can do it for the spot market, that is for the cash market, all the shares which are listed. And we can do this for any type of securities which has got the time series data points. And I have got a chart now, just a minute. So any asset class that can be traded, sometimes some technical analysis cannot be done for just because it is trading. We cannot be doing it because of the liquidity issues. You know, it will come and we'll discuss that in a later stage. Okay, so it can be done for any time, any historical data time series. If it has got, we can do it efficiently, but efficiently we can do it or not, that depends on the liquidity. Okay, so time series data in technical analysis context is information about open, high, low, close, and volume. So these are the information we should be having it. Open price, high price, low price, close price, and the volume data. Okay, so once you learn how to drive a car, can you literally drive any other car? Supposing if you know how to drive Tata Tiago, can you drive Mercedes Benz also?
So basically we can drive, but the automation can be different.
Yeah, we are not interested in the automation, but driving aspect I'm asking you.
Yes, sir.
Supposing if I know driving my Ambassador car, can I drive my Tiago car?
Yes, sir. Yes, sir.
Yes,
Or
sir.
if I know how to drive my Tata Motors Tiago, can I drive Maruti 800? Obviously, I can do it, right? It is something like that. It is okay. If you know how to do technical analysis on a one particular asset class, that can be implemented for various other asset classes, and the interpretation remain the same. Is it clear, everybody? Okay, so I have a chat box. Somebody told any asset class which can be traded. Yes, Chirag is saying yes. We can actually trade. We can actually drive any sort of a car as such. Okay, so the technical analysis is also same, in other words. Okay, so likewise, you only need to learn technical analysis once. If you have learned technical analysis once, it can be in fact done for any other asset classes. Okay, so once you do so, you can apply the concept of TA on any asset class, equities, commodities, foreign exchange. We already discussed this. So this is also one of the biggest advantage of TA when compared to the other fields of study. Okay, so other fields of study means fundamental analysis. Tell me, for example, if you know how to do fundamental analysis of, let's say, automobile sector. Okay, you know the fundamentals, how to make a fundamental analysis of automobile sector. Just because you know fundamentals, how to make a fundamental analysis of automobile sector, can you do fundamental analysis of energy sector?
No, sir.
Fundamental analysis of commodities like gold, silver, platinum?
No, sir.
Okay, so it is difficult to do. What I'm trying to say here is fundamental analysis will be different for different asset classes. And within the asset classes, it is also different. Gold fundamental analysis is different. Then copper fundamental analysis is different. Crude oil fundamental analysis is different. It is different. It is. And because of which we have got various types of analysts. They say that I'm a crude oil analyst. They say that I am a crude oil analyst. Somebody say that, no, I am actually a gold analyst. Somebody say that I am an energy sector analyst. So why is that so many analysts are there in case of fundamental analysis? Because it is very diverse and it is very difficult to do hone expertise on only few of the sectors I can actually expertise. I can say that I am very good at energy sector and power sector and also telecommunication sector, but I don't know how to do analysis of, let's say, for example, banking companies. Okay, so that is why we have got various sectorial analysts as such. Okay, and they've actually got expertise in they're studying the trends of that particular sector for the last so many years, and that is why they are comfortable doing it. Okay, I may be a person who must have actually let's say, for example, I worked in the Bharti Airtel for the last 15 years. Now I have been tracking the telecommunication sector as well as Bharti Airtel for the last 20 plus years now. So now I can choose to become a technical analyst, fundamental analyst of telecommunication sector, because I know in and out of the sector now, since I worked there for the last couple of years, and because of which I know how this particular sector works. And I also worked in the dominant company of the telecommunication sector, that is Bharti Airtel. I know because of my experience, I can say that I can easily analyze the sector as well. I can even set some trends, what is going to be lying ahead based on fundamental news which is coming in. Getting it what I'm saying? So that becomes difficult with respect to fundamental analysis. If you're feeling that fundamental analysis is easy when compared to technical analysis, no, it is. Fundamental analysis is very difficult when compared to technical analysis. Technical analysis with only 3-4 indicators or maybe through price action, okay, you can say that even if you don't have any fundamental information about the company, you can still tell your views just in 2 or 3 minutes. Take my words. But in case of technical and fundamental analysis, it is not that easy. It is. You should become a sectorial analyst. You should actually strive a lot. You should struggle a lot. You should have prior experience of the industry, working in for that industry for some time. Okay, that is a difference. Okay. And next is, however, the concept of technical analysis will remain the same irrespective of the asset you choose to study. Okay, for example, an indicator such as moving average, convergence and divergence, or relative strength index is used exactly the same way on equities and commodities, or maybe currencies for that matter. However, setting types may be changing. What the setting I'm using for commodities trading for the same RSI may be different for the moment I am going to change the asset class. Okay, so what the indicator will be, supposing that for gold, I may use RSI. But for copper, RSI may not work that well for me. I may think of taking into consideration of a MACD or MACD for that matter. Okay, so within the indicator, I can actually pick and choose, and I can actually make some alterations, and that's how I can actually do technical analysis. Okay, so that's about it. I will discuss what is RSI, MACD, all that. So next comes the assumptions of technical analysis. We are going to stop here. We'll pause here. Okay, just in case if you've got any questions, you guys can ask me because it's 11:45 already. Yeah, any doubts so far what we have discussed in today's session? No doubts? Shall I ask you doubts now?
Yes.
Okay, which one is easy? Technical analysis learning is easy or fundamental analysis is easy?
Any day, technical.
analysis.
Okay, so both are easy, but practicing, when it comes to practicing, it depends on the profits. Okay, the profits, the way it is flowing in, I can actually say which is actually good or bad or something of that sort. I am not really want to confuse you on that, but relatively technical analysis is easy to learn. Okay, so that is what I can actually say based on my experience. Okay, so anything else, class?
No, sir.
Okay, so thank you so much for being with me, and we will have this session coming in the next week. We'll be having on Monday. Okay, thank you so much. Okay,
Thank you, sir.
Thank you, sir.
Thank you, sir.
Thank you,
Thank you,
sir.
sir.
Thank you, sir.
hope you
Thank
seen
you,
you
sir.
all. Seen you. I want to see you all on campus very soon.
Yes, sir.
Thank you.